also this notion of looking at life expectancy. This is akin to saying, I'm going to value a homeowner's insurance policy based on its expected payoff. Well, if we did that, if we said, well, here's the value of the house that's going to be replaced if it burns down, here's the probability that it'll burn down, I'll multiply these two numbers together, that's the expected payoff, and I'll compare it with a premium. But the expected payoff never exceeds the premium because of the loads, the fees the insurance companies charge on life insurance. So nobody would ever buy homeowners insurance if we thought about homeowners insurance on a break-even basis. But we don't. We look at the worst-case scenario, which is our house burns down, and that's where the value of the life insurance comes in. The homeowners insurance. Here, we have to look at the worst-case scenario, which is we live to 100. And that's where Social Security's value comes in. The guys on Wall Street and other people that think they're savvy investors who think about this on a break-even basis, and a lot of people in the financial world do that, are just thinking of missing these 2 points. They're missing the fact that they have to risk-adjust a return on the stock market. Anything that's risky has to be risk-adjusted, so it's an apples-to-apples comparison with Social Security, which is a safe, absolutely safe payoff. I don't think there's going to be any change in benefits for people that are, close to retirement or at retirement. And secondly, you have to look at this as an insurance product. You can't just value it on an expected payoff basis.
Absolutely. It's turning that perspective on its head. We're not talking apples to apples. It's not coming at it from the investment angle, the break-even angle, the different way of looking at it altogether.
Divorced people are in a different boat than married people, and there's different boats than single people. And the other very interesting thing about divorce is if you get remarried, you'll lose access to spousal benefits, but if you get remarried after, and also widow benefits, but if you wait till 60, you can get divorced. You can still get divorcee widow benefits. So it might actually be possible for somebody who's been divorced and remarried, and the ex was a high earner, and the ex died, and now that person's kicking himself or herself for having gotten remarried before 60. They could get divorced and get remarried again right after 60, and probably be eligible, from what I understand, for divorcee widow benefits on that deceased ex's work record. So you can see there's lots of possibilities here. It doesn't just involve filing at specific dates for benefits, but it also impacts your decision about getting married or not getting married, getting remarried. All these things are play.
Absolutely. Just from what you said right there, if you're thinking about getting remarried, you better look at your Social Security first, because these are...
Or even staying married, because if you get, if you are married and you could collect on an ex, it might be better to get divorced.
Good point. Good point. And these are choices that you make that stick with you. So you want to take a moment to really get into.
So if you come to the judge with an agreement that you feel is fair, and both sides, and you show the judge, look, it's fair because the living standards aren't crazily different, and we've been married for a long time. If we're just married for 10 minutes, then they probably should be very different if one person's earning a whole lot more than the other.
Something like this can be huge. There is a question coming here. So one of the things that the divorce software does is it takes into consideration things like spouses that didn't participate in Social Security, and that. How big a factor could that be to somebody who's getting divorced?
Well, it could. There are divorcee benefits, which the program fully and carefully calculates. If you were married for 10 years, it will calculate those benefits. It will also calculate divorcee widow benefits, which are available if you remarry. Even if you remarry after 60, if you remarry before 60, you can't get them. But there are divorcee spousal benefits you can get if you don't remarry. So the program will take this into account in figuring out, yes, you are getting divorced. Yes, you don't have an earnings record or much of one, but there are these benefits from your ex that you can collect, and it's not going to affect his benefits or his new spouse's benefits or his new wife's benefit, if we're talking about the ex being a husband.